Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take a look at some of the things that are taking shape or developing in our financial markets and our economy. Today, actually, we're going to take a good look at what's going on with gold. I have with me my co-host, Chris Agelastos. And Chris, it's interesting. Gold has been on a tear this year. And the stock market's doing well. I saw a number the other day where the total market value of the top 7 companies, I believe they were all US,
Hmm.
like Nvidia, Google, et cetera, all the big players. Their market value is greater than, I believe, China's GDP.
That's
And
significant.
yeah, I think it is very significant, and I think it speaks to, there is as strong as the market is, there seems to be a very high concentration of the focus going into just a few select areas. And
Hmm.
I think that's one of those things that speaks to, where a lot of people are concerned of there being a bit of a bubble in this marketplace. In fact, the reference, as we've talked about many times, they compare it to the dot-com bubble in terms of what we, may expect to see in the future. Hopefully not, but
Hmm.
it's a very interesting look at just where there's again a tremendous concentration of wealth or value that's being, you know, placed into these few stocks out there. So, but
Yeah.
let's take a look at gold, as I mentioned earlier on the opening here. We have, and we talked about him before. We have the not the junk bond king, excuse me, the bond king, Jeffrey Gundlach, who
Hmm.
says that he's holding on to the title here. He's holding on to one asset that's outperforming stocks and Bitcoin this year. Drum roll, please. That is gold.
Yep.
And it's interesting because he's not alone. Number one, he's really been a very strong advocate or proponent of owning gold and the direction the gold market is heading. But he gets into some really good points here as it pertains to and really something that you don't hear a lot about, but as it pertains to the comparison of the gold market and the crypto market, and talks about how gold is a basic fundamental play to protect against what's going on in our financial markets and our economy, number one. But number two, to take advantage of appreciation or growth in the market because of these factors, the inflationary factors and things of this nature.
Yeah.
And what he addresses, which I alluded to a moment ago, is really when you get into like that whole Bitcoin and that crypto world. Certainly it's a viable in a market and investment in so much as that people are putting money in there. There's tradability to it, et cetera. But he talks about how it is a very speculative play. It is
Hmm.
something that is you are dealing with something that doesn't share the same fundamental strength and the consistency and the history that gold does. And that's refreshing to hear because so many people, when they look at or when they discuss the prospect of cryptos and the prospect of metals, they tend to that literally say that crypto carries with it the same stability or strength because of its privacy, tradability, all those
Hmm.
things as what gold does. So I'm in agreement with him here. And I don't know, what your thoughts are as it relates to, the crypto versus gold, but to me, I think he's spot on.
Yeah. I mean, crypto is obviously very speculative, and most people that get into it, I think, truly understand that. And what they're really chasing is high returns. What's great about gold is that gold gives you that long-term stability. And currently, it's also giving you those huge returns that people wanted to see with Bitcoin and other cryptos. So it's to me, it's the best of both worlds. You're getting something tangible that you actually own. Not this electronic credit that's in a hard drive somewhere. That I don't think it would surprise anybody if Bitcoin, for example, dropped by 50% and then maybe came back, and bounced back from that. But it's extremely volatile. People have become used to seeing it go, a little while back up to 90,000 and 100,000, and then down to 30 or 40. And so big swings, which is fine if you're speculating. But what's great about what gold is doing is you've got this long-term stable track record for protecting your money, your purchasing power. And now this year, I think we're up to about 38% or so return year to date. It's moving so much; those numbers are constantly changing. But he's even saying we could see $4,000 an ounce by year end, which again, at the beginning of this year, people would have said he's nuts. Now we're playing around with 3,700, and we've still got a few months in the year to go. So this is gold is definitely becoming what he says here is a permanent allocation, something that people have realized that they really need to have in their portfolio, and they need to buy it and hold it and just let it do its thing, which is protect your purchasing power and then also reap some benefits with great returns.
Right. Well, and keep in mind, $4,000 an ounce gold. First of all, from where we sit today, I mean, you're talking not even a 10% move. So
Right.
it really that really is not much, especially when the Bond King here cites the fact that inflationary pressures are a
Hmm.
huge catalyst for what's happening in the price of gold. And I mention that because in just a week or so, we're going to likely be seeing our first rate cut of three that we'll have just between now and the end of the year, which the
Hmm.
concern everyone has is that that is going to usher in some greater price inflation, et cetera. So I think what you might find with Jeffrey here is that he's probably going to miss the mark like so many other people have this year, in not in a bad way, but that $4,000 price, it could dwarf that by year's end because again, we started off this year at 3,000 an ounce gold with
Yeah.
many projections saying, okay, well, 3,300 is probably the target range by year's end. And we blew through that in no time. So
Yep.
now let's look at this next article. And this one, the title of it, I know you are, as am I, a big believer that metals prices are the place to be and there's a lot of growth like we've been talking about here.
Mhm.
Well, this article is gold cooked. Is it done? I sent this article over to you. I was wondering, I wonder if Chris thinks I've lost my mind, and and I'm out there talking about how gold's going to have a major correction. But it is a very interesting read, and for those who are tuned in, you can find the link in our title description here of the podcast. But what it's talking about in a nutshell is how, from a chartist standpoint, gold perhaps is cooked. It's hit a
Hmm.
point where now it should be time for a reversal or a correction of some kind. But, and I love this but, because it it gets into the fact that the the chart doesn't tell the whole story because of
Right.
the inflation situation that is so grossly uh what would you say, covered or stated in our
Yeah.
country. And my
Yeah.
favorite part, and I guess why I encourage people who are tuned in to maybe take a quick read on this article, take a couple minutes at that. But it talks about how, like the CPI, the consumer price index, talk about how in 1980 the cost of a new car was around $7,600, and they say that it has only increased twofold since 1980.
Hmm.
That's according to the CPI. Okay.
Right.
I don't know where they're looking, or how somebody with even good conscience could write an article or make a statement that a new car is averaging $15,000 today, when in
Right.
fact, as they say here, today it's actually closer to 50,000, $48,000, 6 times higher. But yet the
Right.
CPI, which the reason the CPI is important, Chris, is because all the things that the Fed does and the markets factor in terms of valuations, et cetera, they kind of pivot to some extent off the CPI numbers. And like when you talk about adjustments in Social Security or things of this nature, and when the CPI is telling you that something's only gone up twofold in, what is that, 45 years, when in
Hmm.
fact it's sixfold or higher,
Yeah.
there's a problem there. And so that's
That's
where,
right.
an answer to the question, is gold cooked? For me, that my answer is a big fat no, it's not. I think it's just getting started.
Yeah, and this is a perfect example of how you can mislead people and misrepresent a situation by picking which numbers you want to use, right? And the government, look, they have an incentive, as you mentioned, to make all of us think that inflation really isn't that bad. And car prices have only doubled in the last 45 years. When you're right, I'm not even sure you can buy a motorcycle for $15,000. Certainly not one with a sidecar. So
Right.
there's just no way it's
Well,
accurate, right?
and they said it just we're all clear because you can find cars for less than 15 grand, but the designation was made. This was new car. There is not a
Right,
new
right,
car out there.
right.
You
Yeah,
can go find a used
exactly.
car, a new
Yep.
car.
But even that's not easy, I'll say. But yeah, absolutely. And so, and they have, in the fine print, right? It says things like, "Well, but back then cars didn't have power windows. Now they do. So you should be paying more, but 6 times more, which is what the real shift has been." So they're saying the number has doubled, and when really it's 6 times. So when you look at money supply, which is a much more accurate indicator of what gold prices are doing, gold prices actually appear cheap, and people can see that chart if they go to the website here. So again, if I was just scanning through the news and looking at the first chart that they illustrated there, I would think, wow, maybe gold prices are at a high. Maybe I should sell. Maybe now's a good time to get out. When in fact, when you have the real data in front of you, you can see there's a lot more room for gold to go. And our U.S. debt situation is much worse than it was back in the 70s, as the chart illustrates. And the bottom line is gold really benefits from inflation, and that's what we've seen a lot of. And so it's no surprise that gold is moving, and that's what I like even about Jeffrey's article, the first one we went over here, is he keeps it pretty simple. If the only thing really at this point, or one of the major things that could hurt gold prices, is maybe some spending cuts and lower inflation, really high interest rates. But I don't think anybody's saying that any of those things are going to happen. I mean, I know Congress is always saying there's going to be spending cuts and lower inflation. But we see just by how they manipulate these CPI numbers that's not really the case.
Sure.
Um, and then when you consider all the central banks are out there buying gold, the people that print the money and know how inflation is caused, they're out there buying gold to protect their assets and their nation's money supply. So I think if you really look into the numbers, it's just another example of why you can't just read a headline. You've got to get in there and make sure that you understand what they're saying and that they're representing an accurate picture.
Sure. Well, and the numbers they give, maybe this is just me, but to me they're like borderline insulting.
Yeah,
Like,
criminal.
I
Yeah,
mean, yeah, I mean, we literally are just reading where our CPI, a number. I mean, it's a very pivotal number that's been utilized for years and
used all the
years and
time.
years when assessing the condition and health or strength or weakness in our economy. And to sit there and read that the CPI is telling us that the value of a new car has gone up twofold in 45 years. I mean, it's like, come on. And this is tied to, as we've covered a lot, a time where prices are out of control right now. Vegetables, we talked about a few weeks ago, went up almost, what was it, almost 50% in a month.
Yeah,
Coffee was up. Coffee was up even more than that. I know, about roughly the same, or maybe a little less.
yeah.
But the long story short, I mean, you're talking about things that are having a very profound and negative financial impact on people, and yet, again, this is the government that's we're trusting to kind of help navigate us through this situation. And ladies and gentlemen, I guess is a perfect segue. This is why, as for 40 plus years now at Swiss America, we've been telling you to diversify into gold because, if you look at what these prices have gone up, and you look at, like, you could even take an ounce of gold, which was uh back in 1980, good lord, probably roughly 300 an ounce, give or take. The bottom line, I mean, hit its high in the I think late 70s. So,
Hmm.
but long story short, even still with gold at $3,600 an ounce today, it is going to help counterbalance the effect of inflation, which is what the Bond King was talking about. So if you'd like to learn more about that, ladies and gentlemen, please contact our office. You can call us at 1-800-289-2646, or you can actually text us at that same number, 1-800-289-2646, which you'll see in our description here of our show. And you can also visit us online at www.swissamerica.com. Talk to one of our representatives, have them send you out some free information and answer whatever questions you have. So, Chris, thanks a million. Look forward to
Yep.
talking to you again soon. And for the rest of you all, have a great rest of your day and a great rest of your week, and look to see you soon.
Yep. Take care.